Okay, welcome back to the ICT course. This video is going to be on all of the basics that you need to know about high probability setups, what to look for, all the confluences you might want, and just when, where, all those kind of questions will be asked on how to take these high probability setups. Again, as always, before I teach from my perspective, I have to give credit to ICT for the concepts he's taught. So if you don't want a deeper understanding of raw ICT content, then definitely check out his channel. Lots of good stuff in there. So just for a little setup overview, for the first thing you're going to want to do is get a higher time frame bias. So this could be from the daily, from the 4-hour, however you want to get your bias. But you're going to want to look at things like market structure and order flow that we've touched on a bit. And if your bias is bullish, then a few things you can do are you can watch for the previous day low for a liquidity sweep. That's very, very nice setup. You can also use the previous day low to high or the previous day's New York session low to high. So that kind of range, if you're looking for retracement entry, so maybe optimal trade entry, mark your fib from previous day low or previous New York session low to the high, and then look for pullback to 0.62 to 0.79 level. And then for the ideal setup, you want to trade if there's a higher time frame draw on price. So maybe there's an FVG or an order block the price is heading towards, and you've got confidence that for the next day, for the next week, maybe price is going to be heading in that direction to either break through it or give a reaction from. So then for the bearish setup, just the same, just the other way around. So pause now if you want to have a read, but it's just effectively the same, just reversed. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me, and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on funded accounts with proven results. And also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. Okay, so then when do you want to day trade? Well, you'll be looking for buys if the daily time frame has recently reacted from a discount array. So maybe there's an order block in the discount area, below the 0.5 level of the move, and you'll look for sells when the daily time frame has reacted off a premium array. And again, you'll want to trade when there's a clear draw towards an opposing PD array, and ideally when there's little resistance in between. So not many areas where price could react from before your zone. Also, if you're using the Asian range, then ICT says that you'd ideally want the range to be less than 20 pips, but I think this could differ because some pairs do trade higher amounts of pips each day. The JPY pairs, sometimes the pips larger, same with like New Zealand, Australia. Some pairs have different pip values in a way. Some pairs move larger amounts of pips, basically. So 20 pips if you're trading something like GBP USD maybe, and just adjust it depending on which pair you trade. Just be sensible. You don't want a huge trending market. You're looking for that range. And then you'll also want to use kill zones to try and catch the high or low of the day with greater probability. Obviously, that's just going to give you higher probability setups, which is the whole purpose of this video. So that's basically it. Just the overall message is then that you should only trade when you have a higher probability of making money than losing money. And that's easy, right? So you should be set to become rich. But it's only that easy if you apply it properly and consistently. So yes, it is kind of simple when you think about it. Use your higher time frame bias, use the PD arrays we've talked about, and look for draws on liquidity. And basically just keep practicing, and over time you'll become better at taking high probability setups. And then once you do that, just get your psychology in check and just repeat. It's not going to be easy, but trust me, it is worth it, and it's definitely possible if you put in the work. Doesn't matter who you are, where you're from, how smart, IQ, doesn't matter. Just practice. I promise you, you will get there. But thank you for watching. This is the second last video of the course. Maybe I'll add more videos, but for now, this is the second last video of the course. And the last one is going to be on the 2022 mentorship model, how you can trade that setup. So very important video to sum everything together and just give you an overall picture of all the concepts being used so you can become profitable. So definitely watch that video. Be out soon. And yeah, like, subscribe, comment, everything. Thank you for watching, and I'll see you in the next one.